Hey yo, everybody, my name is Lebza Bulls. Welcome back to the channel. It's been a very long time, really, it's been a minute. I think before we continue, before I even ask you guys for subscriptions, because today I'm gonna spend a lot of time begging you guys to subscribe, really, because I've got a goal that I'm trying to smash when it comes to our YouTube channel. But before I do that, to the people that have already subscribed, for the last couple of months, I haven't really been consistent, and I think I owe you guys an apology. I am very sorry to have asked you guys to subscribe and not upload. To one of the most, I think, very important things I have to mention is because in the last couple of years, especially the recent months, I've been focusing on mentorships. So, when people have paid you, you can't compromise on the quality. There are a little bit of some things that become a challenge in the groups. In South Africa right now, we've got a problem we call load shedding, where there's a scheduled power cut. Sometimes the power cut will happen at the same time when I'm supposed to have my mentorship sessions, and then we have that little bit of a problem. So I have to now prioritize extra time after electricity has come back. Even if it's time for my personal things. It's time for me to shoot or record a YouTube video. I can't because I have to compromise on that. And by so doing, I involuntarily neglected you guys. I have to apologize, even for the people who are viewing or are here for the first time. I would verily give you a promise that two of my groups in mentorship groups have just recently expired. We're done with the content. I'm done mentorships, and I'm not willing to be taking a huge number of mentorships at the moment because I have to, put back my focus into the growth of this YouTube channel. You can even see, you guys are witnesses. You can see the number of subscribers. It's literally not growing because I haven't been putting in so much effort. By source saying, I would like to believe that this video is literally video number one. All the other videos for me that I've posted 2 years ago of interviews with big traders. Also, that's one of the things that people have been asking me, like, Libza, when are you bringing interviews? We want to, get inspired by how literally people don't have access to big traders. These traders are on YouTube, literally showing their lifestyle. People don't know where they come from. So it's always convenient when I bring traders on the platform. I've done that for the last couple of years. If you haven't, just check the previous interviews, previous videos, even on my Instagram at Libza Bulls, you'll find some interviews that I've had with big traders. It's always very inspiring for beginners to, listen to the stories of, literally how a big trader started off from trading a $1 account. Now they're trading a $1 million account, So I have the power and the accessibility to those, but I promise you, I'm going to bring them because mentorships are the core reason why I haven't really been putting in so much effort, right? So if it's your first time on this channel, it would really mean a lot to me because I'm literally starting from scratch. If you subscribe, and once you've done that, I do believe that, according to my YouTube knowledge, when you click the bell button and each time I upload, you become the very first person to see. This is going to be very important because I've got competitions planned where the first 5 people to comment, or which obviously you would have to be the first person to view the video, are the people I'm going to put in the draw for the Instagram Live e-wallet challenge. So I have been working very hard. So I'm very confident to be. I need to relax with, trading extensively. I would like to believe I've made enough money for myself to even give away. So if you can click the bell button, you are going to be able to view or be amongst the first 5 people that I'm going to select and that are going to be a part of the challenge, right? So give me a thumbs up if you love the video. I'm sure you've seen the title of the video, you've seen the thumbnail. I'm doing this because the concept that, or literally what you're seeing on screen, is what I have recently been speaking about in the last SMC session that I had with the group that I've just told you about, which I find very interesting, how people still make mistakes and find it difficult to differentiate between a break of structure and a change of character. So my way of teaching is literally, I'm going to use very basic English, right? You might not even hear any of the terms that you have read about, which are very complex. I'm going to use very basic English to explain, and I believe and hope that it's going to be of benefit. You are not seeing an order block, you're not seeing supply and demand on the top 3 ICT concepts that I believe you need, because I will tell you why, right? Number one, we're going to define what a break of structure is, right? Those who know change of polarity from retail concepts, it's almost the same thing, right? When you see price headed in a certain direction and it starts literally giving you a little bit of a pullback, right? Just know that when the move that comes after the pullback breaks the low or the high, which we can conclude is a broken structure, that is going to do what we call rebuilding. And it's what we are going to start looking at when we look at our breaks of structures. What you see me drawing here is a simple or closest example of what a break of structure is going to look like. And most of the time, I'm going to be zooming in and out. Like most of the time when I teach, I zoom in and out. So because I understand that people who are viewing our videos from mobile with literally little screens. So bear with me when I'm zooming in and out. I'm trying to be neutral. What you are seeing here, where is structure break? This was a structure because when we speak about the market, we speak about two polarities. If we've sold and we bought, the in mathematics we used to call them the turning point. That turning point creates automatically what we call a structure. So the inducement, which is this move over there, I'll explain what inducement is what determines the structure as a broken structure. But before it continues to head down in the continuation or to continue in the direction to which it intended before the pullback, you'll start noticing that it comes back slightly above that structure that has been broken. That's where you are going to ultimately get your entries. And if you saw above there, I wrote number 3, FVG or IMB, fair value gap or imbalance. The concept that I'm going to give you right now is what you're going to need out of all the concepts that exist in smart money. When price has broken structure and it gets back above in this decline or below in a case of price appreciation, you will find or you'll have to identify the closest fair value gap above the broken structure in this concern or below the broken structure in an appreciation, price appreciation or price going headed up, right? That's where you're going to get your entry, right? So a broken structure, if you want to define it without demonstrating it, is literally a continuation structure. It's the continuation of price that will include multiple pullbacks prior or after structure breaks. It is going to be it's going to be a completely different story when we speak about change of character. Change of character is explaining itself. Remember in retail when we spoke about, let me get a path quickly. When we spoke about the formulas of a downtrend and the formulas of an uptrend, where I said, when we look at a downtrend, we're going to speak about a series of lower lows and lower highs. Lower lows, lower highs, lower lows, lower highs. As much as you are seeing these kinds of series, you know that the downtrend is in a continuation mode. However, we know that the downtrend is not going to continue further down when, for example, we have this low, we have this high, we've got a low that is lower than the previous one, we've got a high that is lower than the previous one, we've got a low that is lower than the previous one, and then we start having a higher high now. At this point in the market, you know that we are no longer experiencing a continuation or a continuous downtrend because we failed to create a high that is lower than all the previous ones. If we're starting to create a new higher high or a high that is higher than the previous one, we are now we should start considering something like this. This is now a series of higher highs and higher lows. What is this formula? This is a formula of a what? An uptrend, right? So in the most very basic explanation of things, somebody asks me, what is a change of character? A change of character is when a certain or a previous trend is changing its direction. At this point, we know that we are moving all the way down because we had a series of lower highs and lower lows, lower highs, lower lows. The fact that we failed to create another lower high, similarly create a high now here that is higher than the previous one, we are changing direction, right? So that's the ultimate way. Sometimes we get to Google and YouTube and try to find these explanations and we still fail. I'm seeing quite a lot of analysis on of my fellow colleagues in the industry, especially on Instagram. It's very disappointing how we still get to make these kinds of mistakes, right? I'm demonstrating them because shortly after this, we're going to go to the real chart. When we speak about a fair value gap or an imbalance, I know some of you guys do understand, but why do we call it an imbalance? Because in the market, we can only have two price movements. To complete the nature of the market, we need to have two price polarities, right? Price polarity number one, of course, would be the sellers. Price polarity number two would, of course, be the buyers. Forget about what I did there. It's literally the nature of price. We're not going to have sellers and buyers, sellers and buyers, sellers and buyers. Sometimes both of them will consolidate. That's why you saw me doing something like this, right? So never mind that. Now, an imbalance is when we have more of sellers than the buyers. At that point, when we don't have the buyers, we know that the market is imbalanced to the downside. So we need price to get back to the upside to balance the market. That's why we call that an imbalance. The most basic way to identify bearish imbalance or imbalance at large is when you monitor the relationship between three impulsive candles that have not been opposed, right? That have not been opposed. Let's assume that three of these bearish impulsive candles, I'm going to have to change the colors. I know you know a bear candle as red. So that it makes sense, let's quickly do this. Just give me a second. This is an unedited video, so I'm doing everything raw as it is. I'm not going to edit anything here. Okay. When you look at this, you are seeing three candles headed to the downside. The demonstrations are definitely not going to be perfect. It's just demonstrations, right? You know how candlesticks look like. What we are going to look at, the first candle, ultimately somebody is going to say it's the third candle because price is going to go all the way up. And when price goes all the way up, this candle becomes the first. But because the up move or the feeling of the imbalance has not happened, price is still continuing all the way down, I will consider this as the first candle, right? It will consist of its shadow below, which we call the weak low. The third candle will consist of a shadow above, which we call a weak high. There is a distinguishing candle in between them, which is the second candle. All of them we would like to, I prefer to see visible body. The visible body candle of all these candles, I must not struggle to see. Even the wicks, I must not struggle to see them, right? What we want to look at first, we want to look at the relationship between the weak low of the first candle, which is that, and the weak high of the third candle. The price spacing in between, which is established by the body of the second candle, is what we call imbalance, right? Let me shade it over here so that you can see. I don't need this. I actually need this one over here. This entire spacing over here is what we call now, ladies and gentlemen, our fair value gap. Our fair value gap is what we call an imbalance. I'm going to remove that because it's in my face. It's literally in my face. I can't see everything else, right? So ultimately, what we would want to do for us to determine a balanced market, we want to see price coming to fill entirely the imbalance. I have to put it out there. The imbalance will most of the time it's not a must, right? We don't control price because of our knowledge. It's not a must for the imbalance to be filled instantly. Sometimes it's going to test the start of the imbalance, go all the way back down. The next time it comes, it tests 50%, which is ultimately where I prefer to enter from, or just slightly above the entire imbalance where obviously your stop loss is slightly at, right? That's how an imbalance would look like. So when price has done this, it has filled that fair value gap. So the gap has been filled, which means price at this point is fair or is balanced, right? I hope you get the gist of what we're talking about. I'm going to give you a little bit of an example, starting from change of character as well as breaks of structures. Now that we have demonstrated them, you'll see what we mean. On this beautiful chart here, we are on the daily time frame on NAS 100. NAS 100 is NASDAQ. You are seeing at this point a continuing uptrend, right? A continuing uptrend. You are seeing a continuing uptrend, right? Let me just quickly adjust this. You are seeing that continuing uptrend, right? Until at a certain point, we failed to create a new high or a high that is higher than the recent one. What we are seeing here is we're seeing a high, but that is lower than the current one. So let me just get a brush over here. You can see that this high and this high are not positioned at the same price level. That tells you that the uptrend is getting exhausted, right? And when the uptrend is getting exhausted, it will literally introduce a downtrend. Again, we're seeing that we couldn't have a higher low. We see price breaking slightly below that low over there, giving us a new low that is lower now than the previous one. This is where our concept of breaks of structures start. I said to you earlier on, you want to look at the move that breaks the structure. It doesn't mean it's going to change polarity and what was support before becomes resistance right now. Breaks of structures will rebuild. When I say rebuild, we say price will get back above the broken structure to target the closest fair value gap. I'm not even zoomed in. I'm going to do that right now. We want to see where price ended, right? As I zoom in, we've seen now the breaks. And when I zoom in, I'm getting to a certain imbalance over here. I said we want to look at the relationship between the first three impulsive candles whose low and highs I am not supposed to struggle to identify. The first, I'm going to do this. So 1, 2, 3. First candle, it's low. Third candle, it's high. Both separated by a certain body candle, which is this one over here. The expectation over here, ladies and gentlemen, would have been for price to go all the way to that imbalance over there. But that's not the only impulsive three candles that we are seeing, right? So at the moment, you can disregard that imbalance. It's not going to be filled right now. Go all the way down to identify a few more. Candle number 3 in the imbalance above will now become candle number 1 for me, because it's low and the high of the first candle over here are both separated by the body candle or the body of the second candle, which is this one over there. So because it's close to current price, that's what we want to fill first. Earlier on, I said we want to test or fill 50% or slightly 100% of the imbalance, which is where your stop loss is lying at. Your stop loss will technically be most of the time where? At the low of the first candle, which is this one over there. Let me put my horizontal line. I'm going to put it over here. Boom. That's why you see price with that week over there. That was a stop loss detection, right? And soon after filling this entire imbalance, price came all the way back down. Why does it go all the way back down? Because we are headed in the direction of the structure that was broken. Remember, I said breaks of structures are intentions of continuation. So we already had that move all the way down and we broke a previous structure. Just because we came back above does not mean we are now getting back up. We have two confirmations to stick to for us to confirm that price is going to literally head back down. The first one is the fact that we failed to create a higher high here. We created a lower low. Secondly, I'm disregarding this pattern. I can see the W pattern. I know retailers are having fun with that, but we need a bit more details, right? The second one was this break of structure over here. Of course, this is the structure we know because price was headed all the way up, little pullback, tried to continue all the way up. That turning point over there is what creates a structure. Basic English. We don't have to think about it in a complex SMC, whatever you may call it, right? So, and I said the candle that breaks the structure, the definite candle that breaks the structure must displace that broken structure, displacing it by means of impulsiveness. Check this out. Boom. You see this red candle over there? It did try, I think this was during the news because this is a bigger time frame for a daily candle to do this. The body of let me zoom in and just quickly show you what I'm talking about. You can see the candle that broke, which couldn't close where it ended, came all the way back up. The weak low and the body candle, the wick is slightly very larger than the body candle. It's the next candle that closes very impulsively. That's what I refer to as displacement. You can confirm this as a break of structure. That is definitely going to be rebelled. You don't have to sell there because you have confirmations that this is a break of structure. Not a change of polarity, break of structure. Go all the way back up to find closest fair value gaps because that's where price is going to get back to. And that's where you ultimately want to enter from. I should have done this actually to give you a replay, right? Once price went all the way back up, maybe I should have cut it from here actually. I should have cut it from here. Just give me a second. I'm cutting it from the candle which displaced the broken structure, which is this one over here. I just want you to see how it played out. So this is what happened. So price displaced the broken structure. Now does what? It gets back above now. When it gets back above the broken structure, you want to see the destination. Remember, I said your destination is the closest fair value gap. And you've identified this one. At first, we saw that, but it's not the closest. The closest is this one over here. So we expect for price to do three things. One, test the start of the fair value gap. Two, get to 50%. Three, get to 100% or the levels where our stop losses are going to be at. Let's see what happens. Boom. So tests, trades above 50% of the imbalance and gets all the way slightly above the entire or above 100% of the imbalance where our stop losses. So definitely your stop loss, if it's somewhere here, you are hit, right? You are hit and you are cleared out. And once you've been cleared out, institutions very excited to take price back in the direction of what? Of the breaks of structures or initially the break of structure because we've just identified only one. Okay. What you're seeing here, boom. So on a daily time frame, you can literally count how many candles does this move down. Last four, that's how long you know you're going to hold. Somebody's going to ask me, where is my take profit? Target the recent or the closest low after price continues. Closest low is this one over here. Right? You target that. That is why you are seeing price came all the way down. Immediately after that, it does the very same thing which we just saw above there. This, because of the continuing move down, is another structure. It's been broken, but price goes all the way back above. Where does it go to? Remember, you target the closest fair value gap. I've got the tiniest fair value gap over there, which I'm not even interested in. This one over here, not interested in. We need a very, 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 very visible fair value gap. However, I'm going to target this one over here. Demonstrations are very bad. I'm trying to do things very clean for you, right? The low or the first candle, its body you are struggling to see, of course. The middle candle is impulsive, right? This third candle is very impulsive, so you don't have to stress about that one. As long as the first candle is showing you a visible wick, third candle, visible wick, second candle in between, the body separating the wicks of the first and the third candle is visible. You've got an imbalance over there. That's why price came slightly testing the imbalance. This could have been where you catch another entry. Let's see where does it further continue, right? Boom. So it continues all the way down because we've just traded from the imbalance, right? I want you to do this in different contexts, or find a different pair to which you can identify these. I think I removed my drawings, even the text above there, but it's fine. And yeah, that's how those are the top 3 ICT concepts that I would prefer you put so much attention to, because they are very, very, very beneficial, right? If you love this video and you want me to record again, which I definitely will, but if you want me to, to quicken the speed of my posts, it's going to be very absolutely incredible to get your reactions and your comments and your subscriptions and your likes. That's going to tell me that you love my way of teaching and you want more of these videos. And if I can get that from you, I will definitely be posting more. The next video that I'm going to be posting, previously we've spoken about supply and demand. I've got something incredibly amazing when it comes or pertaining hidden supply and demand zones. That's definitely the next video. If you want me to post that as quick as you definitely demand for me to, show me by the love, reactions on your likes there and your subscriptions, as well as your comments. But also, because remember, I am not an expert in trading. I have learned trading for the past 6 years. Doesn't make me an expert. So there are things that I will still find difficult, or there are things that I'm going to get incorrect. If you saw something that's really not making sense and you know a bit better than that, you are definitely more than welcome to correct me in the comment section, and I will definitely be, interested and happy to engage with you. Until then, I think I need to make a little bit of a quick update on the interviews. What you have to do is just to go follow the Instagram account Lebza Bulls. I'm going to write it down there. That's the thing that I'm going to have to edit. That's what's going to make me edit the video. Just go to Lebza Bulls. Let me write it down here so that I don't have to be going to different apps to. So this is my Instagram account, Lebza Bulls. Sorry about the caps. It's the only account, Lebza Bulls. I don't have any fake accounts. There's no one. I'm not famous. Nobody is imitating me. The last account that tried to be me was Lebza _ I forgot what. I reported that account. It's still not closed even now, so I don't know why. Right. So I think that's the only update I want to give you. The interviews are going to happen live on Instagram, not on YouTube. They're not going to be recorded because I prefer to get live comments so that the trader that's in the interview can engage with you, right? So that's the update that I wanted to put out there. I'll check you guys out in the next video. Cheers, bye.